Hello, dear friends, and welcome back to the channel. I'm thrilled to announce that we've reached a significant milestone, 400 subscribers. This achievement is thanks to your continued support and trust in my work. Today, we'll be exploring the top 11 markets for the week, diving into the trends and insights that traders need to know. Remember, your engagement, likes, comments, and shares keeps this channel growing and helps me continue providing these updates for free. Let's dive in. Based on the current data and market structure, we are analyzing the DXY within a broader corrective pattern. At present, it appears we are in Wave B, which could conclude within the 50% to 78.6% retracement range of Wave A. It's essential to note that the key invalidation level is critical to this analysis, as any breach could alter our perspective. For now, we'll focus on the current setup. For our chart analysis, Wave A displays an impulsive structure. Wave B forms a zigzag corrective pattern that has retraced approximately 90% of Wave A. Wave C, expected to follow an impulse pattern. Typically, Wave C extends between 100% and 161.8% of Wave A to complete the correction. Currently, Wave C is unfolding. The third wave of Wave C seems to have concluded, indicating the likelihood of a corrective move. This corrective phase should not overlap the territory of Wave 1. The final wave, within Wave C, might be shorter or equal to the first wave, after which we anticipate another decline. Weekly chart observations. Historical corrective patterns in this market tend to be sideways, resembling flat formations. Even when a downward impulse pattern has formed, subsequent waves often retrace by 90% to 100%, making these corrections significant. Hourly chart details on Wave C. Wave 1, impulsive, with an extended first sub-wave. Wave 2, a flat expanded correction, retracing only 23.6% of Wave 1. Wave 3, currently extending, and progressing between 100% and 123.6% of Wave 1, though it hasn't completed its internal microwaves yet. Looking ahead, we anticipate a corrective phase within Wave 3 that stays above the territory of Wave 1. Following this correction, another bullish wave should emerge to complete the larger corrective structure. Key levels and invalidation points will remain our guide as we refine this analysis. Let's take a look at the gold chart, with a slightly different approach to wave counting than last week. The first wave consists of 5 upward movements, while the second wave is completed by 7 swings, forming a double zigzag. Following this, we observe 2 patterns, labeled 1 and 2, that typically occur before the third wave, where we see a retracement of that wave. Next, there is a triangle pattern that I identified, and the fourth wave aligns with this, confirmed by 5 countable waves. As I study the market based on facts in my learning, I focus on recognizing structures. If I can't identify a structure, I apply the rules and guidelines of the Elliott Wave Principle, which leads me to anticipate a corrective pattern after 5 waves. Regarding the fourth wave, it manifests as a double zigzag. It's important to mention the different types of patterns that can occur, including various forms of flats, running triangles, and complex combinations. It appears that a higher wave is still in play in the gold market, with the potential for further extension. I also want to highlight that the current third wave is 161.8% the size of the first and second waves, with the possibility of reaching 200% or even 261.8%. This potential increase is driven by movements in the larger degree of the wave, which can be extended across several degrees. Now, I want to examine the third wave for our chart. The patterns 1 and 2, along with the extension of the third and fourth waves, are significant because the triangle pattern in the commodity market can lead to a very strong fifth wave. Following that, 5 upward waves can constitute our third wave, and only 1 wave is needed to complete the larger third wave before entering the corrective phase. Based on recognizing the triangle and the extension within Wave 1, which I've marked, and the corrections that are at the 50% and 61.8% levels, we might be on the verge of witnessing a resurgence in gold prices. The third wave usually forms with acceleration and shallow corrections, and we can expect to see 5 waves upwards stemming from the beginning of the fourth wave triangle. The key price point for this analysis is the invalidation of the expected movements. Next, we examine the 1-hour chart following the fourth wave triangle pattern. Here, we see an impulse pattern with extensions, where almost all three impulse waves are equal in size. However, the daily wave consists of a double zigzag with 7 swings that correct between 50% and 61.8% of the first wave. Target levels are set based on the first wave, and breaking through the previous market peak opens up the possibility for a bull market. More importantly, we should analyze the corrective pattern that forms after completing the impulse pattern of the first wave. Shallow corrections serve as a green light for an extension in a bull market, resembling a classic impulse pattern comprised of 5 upward waves and 3 waves of correction, with potential extensions in microwaves. Keep in mind that the key price point for this strategy remains the invalidation of the idea, and it's crucial to monitor exit strategies from the current consolidation. I will analyze the Bitcoin market by examining an impulse pattern in a conservative scenario. On the daily chart, we can identify a leading diagonal pattern followed by 3 corrective waves that have ended near the 4th wave. The 3rd wave extension is succeeded by 5 waves with further extensions, where the 5th wave of this impulse pattern is shortened, thus completing our 3rd wave. Subsequently, a 3-wave pattern is completed, which can also be interpreted as an expanded flat pattern. The trend continues with wave 1, which is a leading diagonal, and while the 3rd wave may not have concluded yet, a corrective pattern forms afterward. This leads to a potential wave that will complete the 5th wave of a larger degree, ultimately resulting in an impulse pattern on an even larger scale. It's important to note that these 5 waves must complete the final channel that has been drawn. After that, 3 corrective waves of a larger degree are expected, indicating a bullish trend. This creates the potential for the bull market to extend further. In my aggressive scenario, I have identified 5 upward waves, with the first wave being notably larger in magnitude. The second wave consists of a classic zigzag pattern correction, which retraces between 38.2% and 50% of the first wave. Following this, a leading diagonal pattern emerges as the first wave, and we are currently witnessing the completion of the 3rd wave of the same magnitude. The correction may be shallow, suggesting that the 3rd wave will continue to accelerate. Additionally, the basic channel drawn on the arithmetic chart has been broken by the current price action. Since this 3rd wave is larger in magnitude, rapid growth is anticipated. On the 2-hour chart, I will calculate based on 5 upward waves. The first wave is a leading diagonal, the second wave is shallow, and the 3rd wave is extended with accelerated progress, which may not be finished yet. We may experience a shallow correction between 161.8% and 200% before the completion of the 5th wave. Following this, 3 waves may retrace, which could also be shallow or form quickly due to the substantial size of the 3rd wave, allowing for rapid extension afterward. Keep in mind the key price levels for potential reversals. Oil Market Daily Review. We have identified 5 upward waves, with the 5th wave concluding a short position, marking our first wave in a larger sequence. The subsequent corrective phase appears to be a triple zigzag consisting of 11 swings, which formed the triple zigzag wave A, followed by 3 retracement waves that completed wave B. Wave C may also develop as a triple zigzag, which is still in progress. Wave X appears to be a sideways pattern, possibly a flat or complex pattern. Once this pattern is completed, and considering the key price levels, we anticipate 3 more waves before the bear market finishes our triple zigzag pattern. It's important to note that there is also a potential bullish scenario. If evidence supporting this arises, I will share it with you. I will examine the price action following wave B on the 4-hour chart. Wave W presents as a simple zigzag, while wave X forms a double zigzag. Wave Y seems to represent a 100% continuation of wave W. Currently, we are observing a well-defined 3-wave movement upward, which constitutes wave W, followed by 3 waves downward for wave X, which has retraced nearly 90% of wave W. After these 3 waves, we may see either a flat or sideways pattern, signaling the conclusion of the bear market and finalizing our triple zigzag pattern. Arist analysis. The Arist pair has experienced 5 waves upward, and now a corrective pattern is necessary to continue the bullish trend, possibly forming a zigzag pattern. This corrective phase is expected to dip slightly below the lower boundary of the drawn channel, and concludes between the 50% and 78.6% retracement levels. Currently, we are in an impulse move, which seems to be the third wave of wave 3 that has been completed. Any corrective wave will likely lead to a bearish reversal, at least until we complete a 5-wave impulse sequence. It is possible that once this larger corrective pattern is finished, another upward wave will emerge, creating a simple zigzag pattern. Let's examine the 4-hour chart for clarity on this identified corrective pattern. Wave A forms a triple zigzag consisting of 11 swings. Wave B, in turn, is a zigzag pattern of the same degree, with each segment containing multiple zigzags. After completing Wave B, price action suggests the formation of another impulse pattern, which appears to be completed by Wave 3, having advanced approximately between 100% and 138.2% of the first wave. We expect any corrective pattern to occur without crossing into the first wave's territory, and to conclude within the specified retracement range. Another bearish wave may develop, likely finishing just below the lower line of the drawn channel, thus completing the corrective pattern, which resembles both a zigzag and a flat pattern on a larger scale. Now, let's take a closer look at Wave C on the hourly chart for a more detailed analysis. Similar to the DXY, the first wave concluded with an initial advance. The second wave is a sharp, simple zigzag, correcting between the 23.6% and 38.2% levels of the first wave. The third wave, however, has shown an extension that is quite significant and structured. It has completed an advance of 123.6% from the previous wave. We now anticipate a corrective pattern to take shape, ending between the 23.6% and 50% levels, followed by another decline. This subsequent decline may be shorter than the previous two waves or could see a greater advance. The key price level to watch is the invalidation of the analysis if prices move into the territory of the first wave, which would suggest the formation of an impulse pattern. The analysis of the silver market will take into account its correlation with the gold market. I have calculated the first wave as comprising 5 upward movements in the simplest form. The second wave developed as a double zigzag pattern. Following this, we observed 2 patterns, 1 and 2, and the progression of the third wave, which attempted to extend to a larger degree. The fourth wave also formed a double zigzag pattern. After that, we consider waves 1 and 2 of the fifth wave according to the rules and guidelines of the Elliott Wave Principle, which suggests that the fifth wave in commodities can be long. Moreover, the advance of the third wave reached only 123.6% in comparison to the first wave, which increases the likelihood that the advance could reach 161.8% or even 200%. I note that for gold to extend in a bull market, this situation is necessary. Otherwise, we may see an extension in a bear market, which would form the fourth wave pattern on a larger scale. It is essential to consider the price in this analysis. I will examine the third wave in greater detail on the 4-hour chart. Here, we again see 2 patterns, 1 and 2, the extension of the third wave, and finally a double zigzag pattern that formed the fourth wave. Next, we have 5 waves upward, and a second wave represented by a double zigzag. A breakout from the green candle channel indicates continuation in the bullish market, while the key price to monitor is the validation of this analysis. Additionally, a failure to surpass the previous peak in the silver market price confirms that we are currently in the third wave, which typically moves with acceleration. Now, let's look at the 1-hour chart by Ralph Nelson Elliott's Principles. Almost everyone, even beginners, knows that 5 waves up constitute the impulse phase, followed by 3 waves in the corrective phase, completing a full cycle. Since silver generally behaves similarly to gold, we observe an impulse pattern, where I have labeled all the microwaves. Based on the correlation between gold and silver, I discovered that the 5th wave was shortened. The second wave formed a double zigzag with 7 swings, correcting between 50% and 61.8% of the first wave. Currently, the price action has broken out of the drawn corrective channel. It is anticipated that we will see the formation of wave 1 this week. As it is the third wave, there may be shallow corrections and extensions in the waves. The break of the X wave confirms the double zigzag pattern, and the green light for confirmation arises once the previous peak is surpassed and any corrective pattern forms. Exiting the basic channel will definitively confirm the third wave. It's crucial to keep the key price of the analysis in mind. I will analyze the S&P 500 using a daily line chart. The first wave shows an extension in the third wave, The second wave is a well-known triple zigzag pattern, which I observe has corrected between 38.2% and 50% of the first wave. However, the third wave appears to be incomplete, suggesting that a continuation of the bull market is likely. There are two patterns, labeled 1 and 2, indicating that the extension has reached the third wave at a higher degree, supporting the confirmation of the third wave with this extension. The fourth wave represents the key price point, where our analysis could be invalidated. Based on current calculations, the third wave has grown to 61.8% of the first wave, and is expected to reach a minimum average of 100% of the third wave, with a progression toward 161.8% being likely. After the fourth wave, we anticipate a diagonal pattern, and we expect to see the third wave increase to the same degree this week. To provide a more comprehensive review, I will also examine the hourly chart. Each segment of the current price action forms an impulse pattern, and notably, the fourth wave hasn't entered the territory of the first wave. Since these 5 waves are positioned within a wedge, I categorize it as a leading diagonal, followed by an expanded flat for the second wave. The forthcoming price action, comprising waves 1 and 2, is calculated from the microwaves of the third wave, which remain below our established base channel. The breakdown of the previous market peak signals a green light for the continuation of the third wave, and confirmation will come with an exit from the current drawn base channel. Please keep in mind the potential for invalidation of this analysis. It is possible that the price action from the beginning until now has only represented an impulse pattern, and 3 waves are needed to correct the second wave. I utilized the NASDAQ 100 chart in a line format. The first wave was clearly accompanied by acceleration, while the second wave formed a triple zigzag, and ended near the second wave of the first wave, having retraced about 50% of it. The third wave, which also has an extension, has crossed the middle line of our base channel, and is likely to extend to the upper boundary of the channel. However, following the fourth wave, we observe a diagonal pattern. The key price level on the daily chart is associated with the fourth wave. Additionally, the final channel drawn confirms the extension of the third wave in this bull market. Now, let's examine the 1-hour chart. Similar to the S&P 500, the NASDAQ has experienced price actions that formed 5 waves, which I consider to be a leading diagonal. The second wave appears as an expanded flat, and the key price level that would invalidate this analysis is located here. Following that, we have another price movement that is characterized by an impulse pattern and a deep correction forming the second wave, still contained within our base channel. In a bull market, any price action that breaks above the previous peak confirms the extension to complete the third wave of the same degree. Conversely, if the price action exits the base channel, that serves as a confirmation for the extension in the bull market. If this does not occur, it is possible that the price action up to the previous peak was merely an impulse pattern that needs 3 waves to correct the first wave, before we see the extension for the third wave. Let me explain the natural gas market using the daily chart. Before we move on to a lower time frame, we have identified a 5-wave pattern that resembles a leading diagonal, which represents our wave or 1. The second wave is a zigzag pattern that has corrected significantly but has not crossed the beginning of the first wave. Following this, we have waves 1 and 2, suggesting that a third wave may be developing. There is also a possibility of 2 patterns, 1 and 2, forming a leading diagonal, which could either be an expansion or a wedge. Next, we will examine the 4-hour chart for more precise insights. The first wave is characterized as an impulse pattern, accompanied by the expansion of the third wave. As mentioned in a recent video, wave 2 constitutes a deep correction that adheres to the rules of the impulse pattern. I have labeled it as a sharp triple zigzag, which typically occurs in wave 2 of the impulse pattern, or in waves 2 and 4 of the diagonal pattern. The subsequent price action, displaying 5 waves upward, suggests the possibility of a developing third wave of a larger degree. This implies that we may witness rapid growth once the market peak is surpassed, or alternatively, we could see 2 patterns, 1 and 2, or a leading diagonal pattern, whether it is of the wedge type or expanded. The key price point for invalidating our analysis is wave 2. We now turn our attention to Ethereum on the daily chart. Since the bull market cycle began in June 2022, A diagonal leading pattern formed the first wave. This was followed by the occurrence of the third wave, the fourth wave, which took the shape of a double zigzag, and finally, the fifth wave, which was shortened by a degree. This completed the impulse pattern, which we labeled as the first wave. Afterward, we observed a zigzag pattern that corrected between the 50% and 61.8% levels of the first wave. To complete the cycle, we anticipated the formation of 8 waves. Currently, we expect to be in the third wave, and its progression will be influenced by Bitcoin, the main cryptocurrency. Based on the classic impulse pattern schematic I created, it is possible that after every 5 waves in a bull market, we will see 3 retracements. These retracements may be shallow or quick, allowing the market to continue in a bullish direction. Next, I will analyze the hourly chart to assess the current price action. We have identified 2 lows, labeled 1 and 2, and we are likely in the process of completing the third wave. Although the third wave may not yet be finished, we anticipate a correction after its completion, followed by the final 5th wave. After this, we expect 3 waves to conclude the second wave, which may also be shallow and could grow rapidly. The price area of the first wave is crucial for completing the 5th wave of this impulse pattern. If it does not meet this condition, we could see rapid growth, as we are currently in a larger third wave, which typically progresses quickly with shallow corrections. I dedicate this analysis to Jay Phillips, and I hope he is doing well and cherishing good memories with his family every day. Based on the chart and an impulse pattern, this idea is presented for consideration. However, if this scenario does not materialize, we may witness a further decline in the pound-yen exchange rate, as a zigzag pattern is included in another analysis. For now, though, the focus is on the bullish scenario. The first wave is characterized by an impulse pattern that has extensions across multiple wave degrees. The second wave is a flat pattern, while the third wave shows significant extension, advancing by 123.6%. The fourth wave, based on the periodicity between waves 2 and 4, also resembles an impulse pattern. This has been confirmed during my examination of the chart. The final channel drawn serves as additional confirmation of the bullish market progression. After the fourth wave, I envision a diagonal pattern. It is possible that the second wave may deepen further before we see another bullish price action. It's important not to overlook the key price point, which is tied to the beginning of the current price action. Now, let's examine the market on the 1-hour chart. Although the first wave appears to be quite choppy, I have classified it as an impulse pattern. The second wave is sharp, followed by a clear impulse pattern for the third wave. The fourth wave has entered the territory of the first wave, leading to the 5th wave, which appears to form a leading diagonal pattern. I have labeled the second wave as a flat expanded pattern that is expected to conclude between the 23.6% and 50% retracement levels. A breakdown of the fourth wave from the third wave of this flat pattern, which is an expanded diagonal, could indicate a green light for continuity in the bullish market. This outcome will be more certain if price action occurs quickly, accelerating and breaking the previous peak. The key price in this analysis is at the beginning of the current price action. That's it for today's analysis of the top 11 markets. I hope you found these insights helpful and practical. I'm also excited to share that I'm working on a special video about my personal journey in mastering the Elliott Wave Principle. This project highlights the challenges and dedication that brought me here, and I'll be sharing details about how you can support my work. Stay tuned, it'll be completed by the end of the week. Lastly, I want to thank you again for helping the channel reach 400 subscribers. It's a huge milestone. Let's keep this momentum going by staying active in the comments and sharing these videos with others. Until next time, take care and happy trading.